so happy to have you with us today. We have an awesome topic, and that topic is how do I file taxes if I'm self-employed? So we're going to give a little information about that today, hopefully help everybody feel comfortable, answer any questions. My name is Stacey Hoffler-Smith, and this is Layton Smith, my partner and husband, and we are both enrolled agents. We also do have an office in Cherryville, New Jersey, where we focus on tax problem resolutions, tax planning, and we also, of course, do tax returns. So we're really excited to give you the information that you need today. Layton, how you feeling today?
Just wonderful.
On
Hello. So we're going to talk today about how do I file my taxes if I'm self-employed. We get a lot of questions. I won't say that. We get a lot of questions on that one there. Folks who are new independent contractors and they have a wonderful industry they're working in and they're earning money, not paying any taxes, and now they're scared. So they come and we have a great conversation with them about how to set up their company, how to structure their company, how to record their revenue, how to record their expenses, and how we file their returns. But I am here to talk to you a little bit more today about also what we're smoking and what we are drinking. So outside of being accountants, we are people of the leaf. So we love our cigars. And our goal today is to bring you a show in the normal cigar lounge environment. We're here today in Summers Point Cigar Lounge. Thank you to them for allowing us to be here. We're going to do a little walk through the lounge later on.
Okay.
But we're smoking and drinking. So today, most importantly, I am smoking an Ave Marie Reconquista full body cigar. Wonderful, wonderful smoke. I think the first time I had one of these might have been about 14 years ago or so.
Wow.
And this is, I won't say one of my top cigars, but I keep it in that top 10. I love this. Very good. I'm pairing this today with a glass of Abloy 12 Scotch. And the beautiful Stacey is smoking
I am smoking a Fat Bottom Betty. It is an infused cigar. I tend to like the infused cigars. There's a few different favorites that I have. This is one of mine. And
I love the name. What's the name again?
Fat Bottom Betty. They're very good. They're very good. Admittedly, I don't know that I'm quite as avid a cigar smoker as Mr. Smith here, but I do like my cigars.
And what are you drinking?
I am drinking a Kettle One Cosmo.
Ah, nice. One of the things you're going to notice with every episode, Stacey is always going to have a Cosmo or a margarita. That's it. It'll just be the two. Whereas I will be rotating. I will be rotating through my favorite scotches. So the goal of the episode is to bring the feeling that we normally have when after work, we go into a cigar lounge, we're taking it easy, and then we have somebody walk up on us and they say, I don't even know how to file my taxes. I made 100, 200,000 last year, and I'm a little lost on what I'm supposed to do right now. And this is the conversation we would have with them.
Pretty much.
You want to start it off?
Yeah, sure. So just a quick overview for everyone. And I'm just going to jump right in, to be honest. When you're receiving compensation from this great new business, and it's awesome that you have that it's bringing in money. Congrats. That's awesome. When you're receiving that compensation, you don't have taxes taken out. So it's really important when you're filing your taxes that we're doing this accurately and doing it correctly. Just as an example, most people don't have to pay taxes on the full amount that they made for their compensation for the year. So if you made $100,000 for the year, let's say you had $40,000 in expenses, you actually only need to pay taxes on the $60,000 that is the net. The IRS or the code allows for you to subtract the amount of your expenses from your income, which is a nice feature, but it does mean that we need to really be on point with what those expenses are. Okay?
All right. So to dig into that a little bit, how do you file your taxes? The first thing that we do is we have a conversation with that individual about their revenue roll. Hopefully they open up a bank account and they made all of their deposits to that one account. And we can just take the 12 months of statements and we can come up with the revenue for the year. If not, we just go by month and we pull the projects that they had and we add the revenue from that. That's how we come up with the total revenue for the year. That's if they do not have any sort of accounting system. So most times when these folks are coming to us, they ask us, what do I do? How do I file my return? If they have no accounting system, they might, if they do have an accounting system, they have an invoicing system. They would have used an invoicing system. So they have something there that we can run that shows all of the accepted projects they had for the year.
And that's great for the income side of it. So that works for that. So
now comes the interesting part. We need to calculate all of the expenses, what it costs you to earn that revenue.
Yeah.
So most times what we're doing is let's just say if they have an accounting system and they started tracking some of their expenditures in accounting system, we can use that. If not, we're going old school. We're going by project and by receipt for the cost that were incurred for each project. So let's just say we're dealing with a photographer because we sit in this wonderful environment with all these lights and cameras around us. All right. And we would just first take a look at all of the equipment that they had, the supplies that they had, the other materials that they had for the year, the deliverables that they gave to their clients, like their booklets and such. We will start going through the receipts, add all of those up, and we put them in different categories.
Right.
Of course, the obvious. You have your advertising and your marketing. You might have certain fees because of whatever jurisdictions you're working in. Then you're going to have your materials, your equipment, and we're going to add those guys up and come up with how much you spent during the year to earn that revenue. Now, the funny piece here is we get these same folks, we'll tell them, all right, we need your revenue, we need your expenses. Then they'll literally email us or upload to a portal one sheet that says 220,000 revenue, 185,000 expenses.
Literally 2 lines. That's it. That is the extent of their records for the year. And we cannot, on your tax return, you can't just put down expenses as one lump sum number. We do have to have it categorized out. And there's lots of different categories. You just mentioned quite a few. The supplies, office supplies,
meals and entertainment, travel,
mileage, all of that.
Your auto, a mileage log.
All of that. And the thing is, depending on your particular organization, what you're doing, the type of business that you're doing, it could be that there's things that we would incorporate into your return that maybe we wouldn't for somebody else. Everybody's return is a little bit different.
Sure. Let's take it just a little bit at the top and we'll bring this around to you guys. How do you file your taxes if you're self-employed? First thing is we need to calculate your revenue. Second thing is we need to calculate all of your expenditures and then drop them into the appropriate buckets, categories.
Yeah.
Okay. We come up with your net income or your net loss.
Yeah.
For the year. All right. Net income. You're going to owe ordinary taxes on that, and you're going to owe self-employed taxes if you are an LLC or a sole proprietor. All right. If you're set up as an S corp, we need to do a whole show just on entity structures.
We do. That's one that's.
We're talking about a lot of different topics here, but we need to do a whole show just on entity structures: sole proprietor, LLC, S corp, partnership, C corps, and why you would pick each one.
Yes.
But we're going to assume today that these folks that run up on us in a cigar lounge, they're sole proprietors. They ain't never incorporate anything. They heard about an LLC, might have started something with LegalZoom, never finished it. So they're
But
just sole
in any
proprietors.
case, sole proprietor, LLC, or not incorporated, this information is going to work just for them. And
That's it. How do you file your taxes? We need to calculate the revenue. We need to come up with your expenditures. And at that point, we take a look and we see, do you have a net profit or do you have a net loss for the year? Like we said, net loss, a net loss as a sole proprietor or LLC, that's going to reduce your other wage income, your other income. That's on your tax return. If you have a profit, you'll pay ordinary taxes on that, and you'll pay self-employed taxes on that. So if you're a sole proprietor or you're LLC, you will file a Schedule C that's attached to your 1040. All right. And that is how you report your income and your expenses from being a self-employed individual. All right. What else do we have?
We're going to include a list of common business deductions in the box. So we'll have a link that you guys can access to give you a little more. It's a wonderful list. It's not all inclusive because every business is different.
Yes.
But it does get the wheels turning in terms of what you should be looking for. Okay. And what you should be focused on.
So the interesting thing there is the list that Stacey's going to include with this episode, we give to all of our newer clients more to jog their memory. It's a list of the most common self-employed deductions. It is structured after the Schedule C and also the profit and loss from a S Corp. But the hardest thing to do is to be sitting here in March of the current year trying to remember what you spent February of the year before.
Literally a year ago. I have a hard time remembering what happened 2 days ago.
There it is.
So the detail that's needed from a year ago, that's tough. That's tough.
So when we talk to these clients, what we do is we very much encourage them to have a business bank account that you deposit all of your checks, all of your revenue to. And for the most part, all of your expenses are coming out of that same account. Or you have a business credit card that you run most of your expenses through. And that will make it so that we have all of the expenses. We're not sitting in March of 2024 trying to remember what we spent in January of 2021, or we're going through a bunch of receipts that you have sitting in your trunk.
Yes. Doing it in the way that you're describing with credit cards, banks, that it has inherent is records that we can grab. Okay. That you can grab. It's there already. It does mean you have to go through it, but at least you're not trying to look for it per se. Okay.
Now, what we do after this, after we get you cleaned up the first year, whoever it is, after whatever accountant gets you cleaned up the first year, the very next thing is planning.
Yeah.
You can't do this every year. We don't have it, not quite as much anymore, but 20 years ago, we used to have these folks walk in, literally, there was black trash bags with receipts.
Black trash
Oh
bags,
my
multiple
God.
boxes, receipts, no order. And yeah, we can't do it that way.
Well, you can. It's going to cost you.
It is
See,
going to cost you.
They caught us at a good time 20 years ago.
They
We were
did.
only like 4 years old at that
They
point.
did.
So
They did.
we just wanted business. And it was like, okay, big trash bag. We're going to charge you a little bit extra. Yeah, that didn't change now. You come in
Yes.
with a big trash bag. Oh, we're
Oh,
going to give you all the great information you need so that you can put those receipts in order in Excel or QuickBooks or any of those other platforms.
Right.
And then you bring it to us in a bit more of an organized fashion.
yeah.
It helps us. It honestly helps you.
It really does.
Yes.
It really does. Because it's helpful for you to know really what's happening with your business throughout the year.
Yes.
You don't want to just be figuring it out at the point that you meet with us
Right. You
and
know
tell
what?
you in tax time.
We're honestly hitting a few topics here. This
Mhm.
one show needs to be like 3. We need to have a show just on entity structures. Okay. And what Stacey was just referring to is one of the biggest problems new clients, entrepreneurs, when they come in, they have a project-based business and they have no idea what their expenses are, which means they don't have any idea if their projects are profitable.
Correctly to start with, to be profitable. Yeah.
You have one client, you didn't charge them $10,000 and it costs you about $4,000 to complete that particular project. You have another client, they walk in the door, $10,000 for you too. It damn costs you $11,000 to take care of that contract, and you don't realize it. You're losing money on projects. Or, one of the easiest way to lose money on a project is you're not taking into consideration the time you're putting in.
This is true.
We've had problems with that for years in our own office.
Yeah. We
would price out a project and then we'd have one of the staff members, it should take 4 hours to finish this project. They'd have spent 25 hours.
Right.
And you're not really taking into consideration how much time you're putting in, because as partners, in the beginning, we were not looking at our billable hours. We were just completing projects. Most of the clients coming in.
We have some frequently asked questions too.
Oh, yeah?
Yes.
I was really getting into the cigar though.
Oh, go ahead. You can do that. And then we'll hit those.
All right. Nothing like a good stick. Nothing like a good stick. And I love this stick. All right. We're not going to focus on the booze and the sticks. Let's go. What is the frequently asked questions?
All right. So first question is, I don't get a 1099. So do I really have to file? What happens if I don't file?
Oh, Lord. You want me to touch that?
Yeah.
Tax avoidance are what we're talking about right here, ladies and gentlemen. Okay? That's goddamn illegal. Now.
Okay. All right. So then we should restate that.
I think we leave that right there the way it is.
Okay. Whatever.
Here's the thing. Look. Life is good. You have your own business. You're earning revenue. Give Uncle Sam his couple shekels. Don't run away from it. Run right into it.
Right.
So.
Now don't overpay him.
When they say that.
We're not overpaying.
Do not overpay.
Yes.
And do not fall into tax avoidance.
No.
So, you did not receive a 1099. You did receive a check from these individuals. You did receive a Zelle or a Venmo or a Cash App. There is a record of that revenue coming to you.
Yes.
Report the revenue and let's come up with the appropriate expenditures that you had to earn that piece of revenue.
Exactly.
So, you did not receive a 1099. Do you have to report this income? Yes, you do.
And I think it's worth noting that it's better to include everything that you earned, whether you got a 1099 or not. Include it all, because what you don't want is a letter later on saying, we have evidence that you...
A cute CP letter?
Yes.
Yeah.
An IRS letter saying there was some income that it appears that you forgot.
Yes.
And
so
we've taken the liberty of editing it.
Underreporter letter.
Yes.
This is a whole nother episode too.
I'm
Underreporter.
It's worth noting the consequences, because the question was asked, so we need to reference the consequences.
So we're not going to beat this up too much, but I would like to add, how does this come up most times? What we have seen in our practice, you understand, this isn't the only scenario, but what we have seen what I've seen is we'll have one entity, they'll get audited, and they will look at all of the 1099s, and they also look at all of the checks that were cut to individuals and to companies. All right. So what we normally notice is you have an entity that get audited, and they look at all the 1099s that was issued. They look at all the checks that was issued for companies, for individuals, and then they turn around and they take that. So that information that they pulled from this audit, that's one of your vendors that got audited. They cut checks to you for the year of $50,000. They never issued you a 1099, but they have checks in your name with your address of $50,000.
And they may have included it on their taxes too.
They definitely did. They wrote it off.
That was an expense for them.
Yes, so, it's part of their being audited. They're showing their expenditures. So now the service center, the state, they look, they pull your name, pull your information, look at the return, see if it matches. And your return, your revenue line is off by $40,000 or $50,000 or more.
Or better yet, maybe you didn't even file.
All right, we're back at tax avoidance again. But,
This
so,
is the thing.
yeah.
It can be picked up was the point that you're making.
Yes,
Yes.
it can be. You didn't receive a 1099. You're supposed to report all of the revenue that you received. Write off the expenses and go. Okay, we'll leave that one alone. That's a whole nother episode, though. We'll make a note when we come back to this episode.
But
We
this
need one just
this
on
was
that.
a question, and this one actually came up a few times. Do I really need to file? Because I didn't. Am I under the radar, sort of thing? So
When we start talking about our audit clients, we'll have some wonderful stories about that just for you.
Oh yeah, we have.
What's the next one?
Lots of material. Do I have to pay estimated taxes, and how would I go about doing that? Okay.
That's actually a good one. All right. Do you need to pay estimated taxes? The answer to that is, well, if you owe the previous year, so let's say last year you filed a return and you owe $10,000, okay? We would come up with an estimated tax coupons that would be $8,000 to $10,000 for the current year, all right? So if you owe the previous year, everything looks about the same. You're self-employed. That's what you're going to have. Then we would just set you up with $2,000 vouchers for the feds, maybe $500 for the state for each quarter. And that is how you would pay your estimated taxes. So your tax professional will give you IRS vouchers, state vouchers for you to make those estimated payments. And the answer is, if you do not make those estimated payments, you do owe the next year, you don't pay the whole amount on time, you will be charged with an estimated tax penalty.
Yeah.
Yes.
Now, the amount of estimated taxes that you are supposed to pay quarterly, it's going to vary based on what your income was last year. So it could be $2,000 per quarter for one individual. It could be $10,000 per quarter for another individual. But your tax professional will be able to give you some guidance on what it should be.
Yeah. So just to elaborate on that just a little bit, we have clients where they'll have one particular year where they have a contract that might be a large contract, and it might throw them into a couple tax brackets above because of that one contract.
Right.
But it's a one-time event. So let's just say they wind up owing $50,000 in taxes that particularly. Let's not be crazy. Let's just say they owe $10,000 in taxes that year. You could turn around the next year. They're not going to have that same contract. And when we're looking at their revenue and their expenses mid-year, like July, August or so, we can see that they don't need to continue making $2,500 a quarter payments. It can be reduced to $5,000 or $6,000.
Right.
On the flip side, we'll have clients that will have a large contract that come in a particular year, and then we will make a larger estimated payment.
And we would basically recommend that you do that. And that would also come into play when it's time if you ended up doing an extension for the year, that's a situation where you want to make a payment with the extension. Yes. So.
Got to remember, an extension, when you file those, is an extension of time to file. It is not an extension of time to pay. Yeah.
They make
Good
that
stuff.
distinction. Yes.
There it is.
Yes.
All right.
Okay.
Well,
So I think we only have time for one more question, and that is also another good one. What is self-employed tax? And how does that hurt?
Oh, that's your FICA taxes. So that's basically 15.3.
15.3?
15.3. So the easiest way to understand self-employed taxes is to think about when you are a wage earner. Okay, when you were working for somebody, you're receiving a W-2. And you know how they withhold taxes from your paycheck. And part of those taxes, they are matching. Okay? This. Okay.
Okay.
All right. So self-employed taxes. We're talking about the FICA taxes. We're talking about 15.3%.
Yeah.
We could go through the technical part of what this FICA tax is and lose everybody, but let's just slow that down and try to explain in a way that's a little bit more relatable. A regular wage earner. Before you were an entrepreneur and you worked for somebody, you received the W-2. You know they withheld FICA taxes, okay?
Which are?
Give the list.
It's just Medicare and Social Security.
There we go.
That's it.
So basically what happens is you're paying into those systems and your employer is matching that same amount that you're paying in. So when you are paying self-employed taxes, you are basically with the ordinary taxes, you're paying your part. And the self-employed is what you would have had if the other half that your employer would have paid.
Right.
Did I explain that simple enough? Do you think I lost them there?
It's basically, since you're not getting paid via a W-2 and you're getting paid just straight to you as compensation as your self-employed person, you end up having to pay it instead of your employer paying it.
Yes.
That's it.
Yes.
Mm-hmm.
Oh, right? I don't like that explanation. But when you go into the technical side, you still lose everybody. It's 15.3%.
Yes.
There
and it only comes into play, obviously, if you have a profit on your business income for the year.
This is true.
And it's an LLC, and it's something that's reported
or sole proprietor.
So it's reported on a Schedule C.
Yeah.
It's worth noting that as your income increases, if you are working with an LLC, like that's what your business structure is, it may be worth considering something different. Because that 15.3% is not going to be as beneficial having with that there.
So what we're talking about here is tax planning and entity structures.
Yes.
Which is the next show or another show, which we will talk about which entity structure is most beneficial
to you right now, where you are, and depending on what you're trying to do.
That's it. So what's the next question? Wait a minute, that was it. We're not going to hit.
That was it. We had
got a whole page of questions. We're going to hit those at a different time.
Yeah, we're out of time. We're out of time. So
listen, this has been a wonderful episode. Let's try to do a recap. You want to do the recap?
Sure.
Go right ahead.
Again, we were talking today about filing taxes as a self-employed individual. We talked about making sure that you have your income and your expenses together, and that based on your entity structure, whether it's an LLC or sole proprietorship, that there may be different forms that are needed for you. We also talked about bank statements and other items that might be used for income and expenses if you don't have a bookkeeper or an accounting system.
Let me help out a little bit.
Yes.
We also talked about tax avoidance and not doing that.
We did. That was our frequently asked questions. We answered the question of what if I don't file? And we also answered the question of what is self-employment tax? And we really spent a lot of time on what if I don't file. So that was good.
We spent a lot of time on tax avoidance. Either which way, there we go. Yeah. It has been a wonderful show. I had fun with this topic. This topic is a little all over the place. Makes it a lot easier when you have a very good stick that you're smoking and something brown that you're sipping on. It's been wonderful, guys.
Yes, thank you so much for joining us. Yes. And keep those questions coming. And listen, if you like the show, please let us know. Just subscribe. And if you have any questions, definitely shoot us those, okay?
Yeah. info@cigarsandtaxes.com.
Yes. And
please subscribe if you like. And then every Thursday, you'll see a new episode coming out to you.
New episode. So stay tuned. All right. Thanks, guys.
Thanks.